All right, let's talk real estate. Inventory's rising, prices are adjusting, and yes, many buyers are still sitting on the sidelines. But let's not overreact. This isn't a crash, it's a rebalancing. Here's what's really happening and where the opportunity is if you're thinking long term. For years, we've been in a supply-starved, FOMO-fueled, rate-driven market. Now, that pendulum is finally swinging backwards. Interest rates have gone up, short-term rental laws have been tightened, and immigration policies have been scaled back. And developers, especially in Vancouver and Toronto, they've been building the wrong type of inventory for years now. So what do we have now? We've got tons of tiny condos coming to the market, Airbnb units shifting to long-term rentals, slower population growth, higher carrying costs for investors, and cautious buyers with many more options. It's not a collapse, that's basic supply versus demand, finally rebalancing after years of imbalance. In Vancouver, April saw home sales drop 23.6% year over year. Benchmark prices slipped 1.8% and inventory continues to rise. Buyers aren't rushing in, not because it's a bad time, but because there's no urgency anymore. That's when the smartest moves get made. This is exactly the kind of market that savvy buyers wait for. Let me break it down. If you're a first-time home buyer, you finally have leverage. There's no bidding wars, there's no pressure to waive conditions, and in many cases, sellers are willing to negotiate on the price, the terms, and sometimes even closing costs with certain developers. If you've been waiting for your shot at the Vancouver housing market, this is it. All right, so you already own, but you're finally thinking of moving up. This is now your trade-up window. Prices on higher-end homes have adjusted, but your current property still holds equity. The gap between where you are and where you want to be, it's smaller than it ever has been, and definitely smaller than it was 2 years ago. And if you're investing, this isn't about chasing cash flow anymore today. This is about locking in better deals, buying real assets at a discount, and holding through the cycle. Smart investors don't just look at cap rates, they look at value, growth corridors, and where the market will be, not just where it is. So don't buy all the headlines, and don't let fear hold you back from seeing this shift for what it really is. It's a reset, not a crash. A window for you to reposition yourself and capitalize upon opportunity. The market is adjusting, and so should your strategy. I'm Tyler from Pilot. If you want help making the right move, not just the emotional one, subscribe, comment, or shoot me a message. I'd love to help you. Let's play this smart. I'll chat with you soon.